Hello, greetings. Today I want to show you how to bank the money that you normally sell to you get from customers. And as you can see, we are going to go to banking, and you select the payments that you want to pay. Remember that you select the amount of money that you received from customers. Remember, when we were depositing, the suppliers were making payments, remember that when they made payments, we didn't see where the money was going to. But one thing you should notice is that QuickBooks automatically deposits all the money, whether in cash or check. It deposits all the money in an account called undeposited funds. And as you can see, we opened the undeposited funds, and you can see the money that Emily paid us and John paid us, it is in that account. So what you normally do, it is to bank that amount of money to ABSA. ABSA is the account that we opened when we were incorporating, when we were beginning the company. So you normally go to banking and you make deposit. That is what you normally do in order to pay those checks. So now we have gone to company. We are now checking our bank account. We want to check our bank account, and you normally go to company and you go to the chart of account. Chart of the account is the chart that has all the accounts. So as you can see, we have opened the chart of accounts, and Absa Bank has a beginning balance of 769,700, and we have some money there that we have deposited. That is the money that we have deposited, payments from the customers. What you can see here is the Absa Bank ledger. Let me maximize it so that you can see. So as you can see, there is the opening balance, and also there is that deposit, that amount of deposit that we received for the suppliers who paid, for the customers who paid us. So the deposits come from money paid by customers, and what you can see on your left side is money that we paid from suppliers. Now we are also opening the undeposited account. So as you can see, we received that 8,000 and 5,000, and then that money we banked from undeposited account, we banked, and as you can see, the balance is 0. So by default, when payments are done, QuickBooks puts it in undeposited checks. So you are supposed to remove the money from undeposited account to Absa Bank. Now we want to check at the supplier center. We want to see at the balance what is remaining. So you can see we have George, and George has a balance of 2,000. That's an account payable. I don't know whether I mentioned that when we bill suppliers, the amount goes to accounts payable. So that becomes an accounts payable. Now, if we want to pay that money, we want to pay that 2,000 to George, and we need to write a check. We are going to select that we want to pay the supplier. Then we are going to write a check, which is 2,000 shillings, and then we are going to, as you can see there, we are going to select the account. So we are going to select the account that is related to that 2,000 shillings. And that is what we are trying to do here. So the reason why it couldn't close that account is because we had not selected the account. So we must select an account. You cannot write a check without selecting the account for which it is affecting. So this 2,000 was affecting accounts payable, and we want to reduce the accounts payable. We want to reduce that balance by 2,000 because now it is a supplier who is paying us. All the amounts of suppliers, all the bills that are raised go to accounts payable, and that is what we were trying to do there. So remember, you must always have an associated account. We are going to the chart of accounts. So we want to see what has happened to our bank. So you can see we wrote a check from Absa Bank of 2,000 and it is there. The check has already been recorded. We are going to customers now, and we want to see if there is any customer who has not paid us, so that we can select that customer to see if we can deposit some money. We see what will happen. Going to customer payments, we want to select a customer who will pay us. And remember that for invoices that are created for customers, they go to accounts receivable. So whenever a customer pays us money, accounts receivable goes down. So we want to pay 57,000 paid by John. And let's see what will happen to the bank. So that is the amount that has remained now. But you remember this 22,000 we had offered a credit. That is the reason you can see there it's 0, because we had given a credit. So we have made that payment. We have gone to customer payments. Let's go to chart of accounts, then we select Absa account. We open Absa account. First of all, we've opened and deposited checks and deposited account. You can see the money that John has paid us, it has gone directly to undeposited account. So QuickBooks does not deposit money directly to the bank. It takes it to undeposited accounts, which is a current asset. Now then, you write a check or you transfer the money to Absa. So now we are going to transfer the money. We are going to make deposits. Actually, we have not transferred. Transferring is like you are transferring from one account to another. You can also use that one, but we want to make a deposit. So you can see we have selected Absa Bank account, and this is the money that we want to pay, to deposit to Absa Bank. So always remember that QuickBooks assumes that the money, once the money is paid from a customer, it will settle in that check of undeposited account. Always make note of that, because sometimes you can check the bank, then there is no money. So look at Absa, the money has come, and there it is given a description that it is a deposit. From which account? And deposited funds. You can see it is showing where the money is coming from. So the money has gone there. So now I want to show you, we have written a check, we have transferred money. Now I want to show you how to reconcile. So when you do bank reconciliation, you normally take the opening balance and you put the ending balance. That is the ending balance. Let's see, first of all, we want to check Absa Bank. We want to check the balance so that we can put in that reconciliation. So we went to the chart of accounts because I had not mastered the closing balance, and that is the amount that we put there. Remember that when we are doing a reconciliation, you have your bank statement beside you, and you have the QuickBooks posting that you have already posted. So you are going to tick whatever is in the bank and also in the QuickBooks. You are going to tick it, whatever is in the bank and whatever is in QuickBooks. So QuickBooks is your cash account. So supposing that I had a physical bank statement, I would put the closing balance of my bank statement. I would put the opening balance of my cash book account, but I would put a closing balance of my bank statement, so that now I will be able to get the items that are in the cash book but not in the bank statement, and that are in the bank statement but not in the cash book. So you can see, for my case, I have all the records. So the difference is 0. So supposing that there was a difference, the difference should have an amount, and that is the reconciling amount that it should reconcile in the coming months. So now you can print your bank reconciliation. Therefore, remember that when you are doing bank reconciliation, you will not just use the whatever you have posted in QuickBooks. You will print out your bank statement. You will also print out your cash book, and then you put the opening balance. You can decide to work with the opening balance and the closing balance of cash book, or you can decide to use the opening balance and the closing balance of bank statement. But you always make sure that you tick, and then you can do the printouts. So in our case, we didn't have any bank charges, but in a typical business, you will have bank charges. Other people will have the credit card charges, which should be in the bank. And whenever you have those, whatever you have in the bank, if the bank has charged some bank charges, make sure that you also post them in QuickBooks. And if you have any reconciling item, make sure that you record it so that your reconciliation will show a true balance. So in this case, now we are trying to show the reconciliation that has been done, and our reconciliation is okay. Then you can just print and file or send to your manager or whoever person is concerned who supervises you at your work. You send them so that they can see what you are supposed to do. So here we are just doing a printing of PDF. So that is how a bank reconciliation is done. And then you print, because in case you have a reconciling item, it is important to keep track. So if we have written checks, we have made deposits. Now I want to show you how to transfer funds. We want to transfer funds from Absa Bank to petty cash. So remember, most of the businesses have petty cash. So you are supposed most of them, like this money come from the bank to the petty cash. So typically this is what happens. But remember that in actual sense, like when you are doing now business, it will not happen the way it is happening here in QuickBooks. You'll write a check. If you have an authorized person who is supposed to withdraw that cash, the details of that person is usually given in the bank. So you write a check. The person who is the signatory or the person who is authorized to sign, If you, the accountant, you are allowed to sign, you can sign. Then once you sign, you go to the bank and the bank will give you that cash. So in a typical business, things are not just going to work as easily the way you can see here. Of course, when you come back to the office, this is what you are supposed to do. But now, in actual sense, you are going to write a check. You write it payable to that particular bank. Then they will give you the money. As you can see, petty cash has increased by 10,000 and our Absa bank will reduce by 10,000. So I was saying that when it comes to the typical, like the real life transfer of money from the bank to the petty cash, it is a check which is written payable to that particular bank that will give you the cash, signed both on the front and at the back. That makes it open. Then you go to the bank if you are authorized or your name has been given to the bank. If you are authorized to be paid, you will be given that money. And that is how it works. So when you look at this chart of account, you'll see that Absa Bank has reduced by 10,000 and the petty cash has increased by 10,000. So basically we have gone through the things that I wanted to show you. We didn't have any bank charges, so I did not put any bank charges. So that one we will learn later. But for now you have the basics. Thank you.